Ooh, what's going on, team? Hope that you guys are all having an amazing day. I want to give first a huge shout out to my friend Andre from the Learn Plan Profit team that actually brought this specific stock to my attention. One of the first things that I want to share with you is the whole purpose of this video is to talk about a stock that is presenting an opportunity due to current conditions. What happened is Bbby, which is Bed Baths and Beyond, reported a very poor earning. I'm going to be highlighting what caused it to sell off and kind of what my plan is. If you agree with me, great. Feel free to share your opinion down in the comment section. If you disagree with me, I would love to learn more on why you personally would not see value in Bed Baths and Beyond, right? Especially with everything that's going on right now, let's help each other out. And if it's good news or bad news, when it comes down to this specific stock, share it down in the comment section and let's help one another out. So I added this to my watch list. And the reason why is, first of all, I want to highlight the idea of its potential. Obviously, when something is showing signs of a consistent recovery, especially due to the very unfortunate pandemic, it sucks to see that it gave back a lot of the profits that it gained. But for someone like many of us, right, that were not in Bed Baths and Beyond, this is a short-term opportunity, right? Kind of like an example that I want to give you is like Facebook. Facebook, when the very unfortunate news of a series of big advertisers pulled out, it shot down and it pulled back for 2 to 3 days, and then it took about a week for it to fully recover and make new highs on the 180-day chart. That's kind of the idea that I'm trying to present, right? It's very unfortunate. Obviously, earnings is much more important than maybe just a couple advertisers pulling out. So this is definitely something that you need to take into consideration and that I don't want to take lightly, but we are here to talk about deals, right? And as of right now, I want to talk about what happened. The first thing that I want to talk about is Bed Baths and Beyond news. Rev is down 49%, which is more than expected, and they missed a big chunk of that, although online sales are up overall within the United States, not when it comes down to Bed Baths and Beyond online sales. So again, a big miss on that one. To make up for losses, they plan to close nearly 20% of their stores in the US and in Canada. That amounts to about 200 stores because they nearly have about 1,000 stores. Again, look a little bit more into it. So it obviously, by them closing down 200 stores and then being down 50% based off of where they were last year, right? It makes sense that it's going to take time for them to recover. It's not something that I expect to recover as quick as Facebook. It's not something that I would anticipate. What is my plan? Let me know what you guys think. This is just my plan. I'm sharing my thought process, not something that you should ever copy or follow. Let it bleed. I don't want to overcomplicate it. Right now, we don't know how bad it can get, right? Today it dropped 26% and it's been selling off not just for today, but a couple of other days. So instead of me trying to be someone that is trying to predict a reversal, buy right now and hope that it recovers, it's great that I'm paying attention to it. It's great that I presented and I identified an opportunity, but it would be very closed-minded of me to think that it can't continue to sell off. So I'm just going to let it bleed. I can add it to my watch list. I can set my alerts and follow up with it when it makes sense. That's step number one. The next thing is wait for a break above the 180-day EMA. You guys know that I'm a big believer in the overall idea of waiting for indication of a reversal. To give you a very simple example, when things go up, it makes sense that they're going to pull back, right? Especially as they become overbought. Just like Bed Baths & Beyond has done before, it pulls back, it finds a support, it consolidates, it catches up to the EMA line on the 180-day 4-hour chart, it breaks above it, and then indicates signs of an uptrend. It is much easier to make money when the overall direction is in your favor. So I'm just going to do my part in letting it bleed and then wait for proper indication and the break above the EMA line to then follow up with it and consider the idea of buying into it. Another thing is I like to average up. So one of the things that I plan to do is if I plan to go in with a swing trade position of $20,000 or $30,000, I'm not going to buy $20,000 or $30,000 at one point. I wouldn't mind buying in with $5,000. And then if it continues to indicate signs of an uptrend as it has before, then as I gain my confidence and I can see that direction is a little bit more clear, then I can slowly add more as it makes sense to me. As then we approach a resistance level, then of course I can lock in profits. So the last thing that I want to talk about is the target sell price. Again, it's just a goal. Obviously, it doesn't have to hit back to $11 a share, but I just put $11 as of course it would be amazing to lock in profits at $11. And based off of where it's at as of right now, right, current price points and how it can recover to even $11 a share, that's a little bit over 40%. But again, with the idea that the more it bleeds, the more margin we build for ourselves for potential recovery. And if it ends up finding a resistance at $10, then guess what? Even though my target sell price was $11, I am not one to complain about making a profit. What's one of our sayings? I make money in the stock market by selling early. So my job as a day trader, my job as a trader in general, swing trader, is to buy when it makes sense, sell when I get indication of a resistance. So again, a goal is something to work towards, not something that I have to hit every single day. And of course, just talking about the 40% potential. People love to talk about the upside, but also I want to highlight the downside. Based off of previous lows, $3.43, you need to take into consideration that things can get worse before they get better. All I'm doing in this video is sharing and talking about a stock that, because of earnings, received a negative catalyst that caused it to sell off. It presents an opportunity for those that maybe see long-term potential or long-term value, even for short-term swing trades, if it begins to find a support and indicate signs of an uptrend. All we do now is wait for proper indication. So I'm going to let it bleed, wait for consolidation, wait for confirmation, like we've talked about the 3 stages of a reversal, and then I can average up when it makes sense to me and lock in profits at any indication of a resistance. That's my breakdown on bed, bats, and beyond. Let me know in the comment section what you guys think. Friendly little reminder, don't forget to stay connected. You guys can join our free Facebook group. That's the first link down below. Also, we just restocked our mouse pads, the Bull mouse pad, the new Wall Street Monopoly mousepad, and as well as the Day Trader mousepad. So if you guys want to check this out, it's under mousepads, the third link down below. Let me know what you guys think in the comment section. If you guys liked this video or learned something new and want to follow up with Bed Bats and Beyond, please make sure that you guys absolutely destroy that like button. Don't forget to subscribe, and like always, let's make sure that we end the year on a green note. Take it easy, team.